Hello, everybody. Kirk Spano. It is the day before Halloween and 6 days before the presidential and senatorial and congressional and other elections that we'll be having next Tuesday. And everybody wants to know, what picture will I put up today? And I will say it's only a picture because I've been gone for 2 weeks. I didn't get to sleep in my bed for 2 weeks. Made me very, very unhappy. Although the hotel I stayed at in Dallas, the Renaissance on Elm Street, very nice. Very, very nice. Not as nice as the Adolphus, but still very, very nice. I spent 5 days in Phoenix, 5 days in San Francisco, 4 days in Dallas, and I will tell you, it is enough. I saw more campaign signs in the greater Phoenix area than I've seen in 5 other cities combined. It was kind of mind-blowing. So I don't really know who's going to win there, but I will tell you they are voting. And we know one thing about the elections. The more women vote, the more likely Kamala Harris wins. Those statistics are out there. At 51% voting, Trump wins. At 52% women voting, it's a toss-up. At 53% women voting, then Kamala pretty much wins. So it splits 51-49 women to men, probably Trump wins. If it's 52-48, too close to call, that's basically what it was for Biden. And then 53-47, pretty much Kamala wins because something close to 60% of women are voting for Kamala. So we'll see. We will see what the turnout is. I think it's going to be similar to the last election. As far as popular vote goes, I think Kamala wins by around 8 million votes. However, there are 7 or really 8 swing states now. And, those states can go 12,000 votes in either direction or 1,200 votes in either direction. So who knows? One message I would say here that I have before I jump into the options and then segue back is that I don't think that the so-called Trump trade and so-called Harris trades are really that much different. I think that there are a few things when it comes to different industries and sectors, and we've covered that before. If Kamala wins, I think that's a shot in the arm for clean energy. If President Trump wins, that's probably a shot in the arm for banking. However, I think it would be short-lived under President Trump. One thing, and this is just facts, we just laying out the facts. You decide what they mean. In 2019, the repo market started to collapse. Interest rates shot up multiple points overnight, and the loan rates between banks for overnight loans just skyrocketed. And that was because the banks didn't trust each other because they felt like, well, those guys might be going under because they have this set of loans and they don't look good. We have a commercial real estate crisis in progress, a slow motion unwind of bad commercial real estate loans. And I think the banks probably are wondering what happens to the bag holders at the end of the day when they can't stretch out their debts, when they can't find a buyer for something at anywhere near a buy price that they can handle with their reserves, their reserve loan loss money. We'll see. But there was a $800 billion bailout by the Fed of the repo market back in 2019 because of the policies of the Trump administration, more or less. And I suspect with all the doubling down on just doing things the same way again, that is my biggest fear. My biggest fear here is a red wave and they roll back income taxes on the wealthy again. They impose tariffs, which will be really rough on about 80% of the U.S. population because it does serve as an inflationary pressure. By definition, tariffs are inflationary. And if we put 10 and 20% tariffs on most things and 60 or 100% tariffs on everything from China, rather than just targeting industries, I think that could be pretty bad news. So I think a red wave fundamentally changes the U.S. economy. I think you probably see a animal spirits rally followed by a similar banking crisis that we had in 2019 that continued after COVID. And that's probably pretty bad for the system and for the economy. I think that tariffs lead to retaliatory measures by other countries. And, we could end up in a stagflationary environment. I predicted this back in 2017 that it could happen. It started to happen. COVID hit. disguised everything. I will go out and say that if President Trump wins and he gets both houses of Congress, that we are setting up for a stagflationary financial crisis 4 or 5 years out, maybe sooner. And that is an opportunity for us, really honestly, to make a lot of money. So I'm not trying to, and I know that there's Trump voters in the crowd. I'm not trying to say, don't vote for Trump. I honestly, at this point, I'm so over it. You do you. But if Trump wins and he gets both houses of Congress, I am preparing a game plan for what to do on a spike and then for the subsequent crash. I've been through this before in my career. I finally know how to handle it in a way where I can maximize some profits. And me being super aggressive, I will try to hit the ball out of the park for myself. You can follow if you want. That's the way I see a full Republican red wave. So let's flip the switch to the Democrats. What if there is a blue wave? If there is a blue wave, I think that there's a good chance that they go too far on spending and on raising taxes, because in my opinion, the tax rates are about the same. It's the loopholes and the tax avoidance that really is the problem. Why should somebody making millions of dollars a year have the same tax rate as somebody making 80 or 90 or $100,000 a year? That doesn't make any sense. That is not a progressive tax rate system. And the reality is that take a look at a rock star, or take a look at an artist, or take a look at a corporate executive who just walks into a great situation. They get what's called an inefficiency. They get money that they really didn't have a big role in creating, because there's some sort of inefficiency in the system that just lets the money flood through the hole. And that is something that's been recognized for hundreds of years in economics, that sometimes the money just flows because there's not a mechanism to control it, because there's an oligopoly, a monopoly, a regulation, just a weird setup in the economy. And that is really why some of the billionaires who didn't invent anything that got really used a lot are super rich. If you take a look at Elon Musk, I've been picking on him for the last few years. I'm going to pick on him more, I think, going forward. But he really didn't invent anything. He didn't invent PayPal. He didn't invent or create Tesla. And he's a great business manager, and he's gotten a lot of money, first from a buyout and then from government subsidies. So when he talks about, the government wasting money and how he wants to tighten up on things, I guess my first question would be, hey, Elon, what about the subsidies we pay to you to help expand EVs in the market that really haven't grown lately, right? The EV growth has really tailed off. Why are you the richest guy in the world? That was why we made you the richest guy in the world. So we'll see. You take a look at SpaceX, all the things that he's done. He's a good engineer. He's not a great engineer. He's a great businessman, and he's great at getting money out of the government. That is why number 2 on my list of things to consider when investing is there government support? And so he has really capitalized on part of my investment thesis, right? It's take a look at the secular trends, take a look at the government, take a look at fundamentals, and then take a look at technicals. And if you can get money from the government, right, that's a big fat checkbook, because they have the power of the taxing. So I take a look at all of this, and I start to ask myself questions about, okay, if there are inefficiencies in the system, which we know that there are, how do we take advantage of it, right? Because we may or may not be able to change it. So we have to figure out a way of, and in my opinion, I don't know that I really don't think we have to raise any tax rates. I just think we have to get rid of a lot of the loopholes from people making 7 or 8 figures, and that it all works out. At that point, we have to learn to live on what we're taking in, which wouldn't be too hard, actually. Because about 1/3 of the federal deficit goes away with interest rates at 3, and most of the rest goes away with getting rid of loopholes. And then if we can get growth over 3%, then the rest of the deficit goes away. That's roughly how the numbers shake out. So a little bit more growth, a little bit less on the loopholes, and a little bit lower interest rate. That actually balances the budget sometime in the 2030s, which we've talked about over and over again. I think that's the way the Democrats are trying to push things. I don't think they're great at it, but I think that it is a path that we could do. I don't think cutting taxes more and then the underlying impact on society would work out. I think there'd be social unrest. And if we do put tariffs on most of the rest of the world, they're just going to do it to us. So that is, in my opinion, a way of bringing in the flat tax without calling it a flat tax. And I think that it is much better for me than it is for most people. And I think it's even better for people who make more than me. So I'll make right around $250,000 this year. And at that level, my taxes under Trump have been, $10,000 to $20,000 less than. And when I say under Trump, I mean the Trump tax code, which is still in effect. And if I had to pay 10,000 to 20,000 more in taxes, would it kill me? No. Would it cost me a vacation? Probably. Would it change how I do business? Not really. And in reality, I don't make that much, right? Because my standard of living is good is because I'm in Milwaukee. If I made that kind of money in New York or LA, I'd be doing well, but I wouldn't be doing great. In Milwaukee, I'm doing pretty great because my cost of living is pretty low compared to these places that I just visited. So if we take a look at all this together, I don't think a lot changes under the Democrats. I think that we continue on the same path, which I think is pretty good. It's not great, but it's pretty good. We do have to fix the border no matter who wins. And I will remind you that the border didn't get fixed under either of the last two guys. Maybe we should try a woman. In the split government situation where Kamala wins but doesn't have Congress, I think that's probably the safest. If Trump wins but doesn't get Congress, I think that he probably disrupts things a little bit, but we can wait it out. And so I think in either split government case, we get a little bit of compromise, more if Kamala is president, less if Trump is president. I don't think that Kamala starts defunding parts of the government. I think Trump does. I think he goes to court. I think he loses, but it's disruptive for a number of years. So we'll see what happens. When you start thinking about the trades to make, though, to me, it's pretty much stick with the secular trends, stick with the companies that are getting government money, which aren't going to change much under either person. And then take a look at fundamentals and then respect the technical. If you don't respect price momentum and you don't respect volume, you don't respect the strength a stock has based on the investors investing in it, you are missing something major, and it explains a lot about performance. Because in the short run, technicals matter a lot. In the long run, fundamentals matter a lot. And we'll get to that chart in just a second. So that really is, and I've done this program backwards just because I could feel that you wanted it. I think that with the exception of the red wave, I'm not worried about too much anything. I think it works out one way or another. Timelines may change a bit, but I don't think really anything changes dramatically under anything other than a red wave. And if they really try to significantly cut income taxes and replace it with tariffs, to me, that leads to a financial crisis. I think all the history, all the economic theory, and all the math and all the follow the money analysis all leads to the same place in a few years. So I hope that's not what happens, but if it does, I got a plan for that. So if somebody asks, so Kirk, where's your mask? Well, I was gone for 14 days, so I didn't have time to get myself a mask. This is the first time I haven't worn a mask for Halloween. Maybe I'll get one tomorrow, but I don't think I'm going to bother. I will say I think this race is about as close to a toss-up as the last two. And so I think predicting it is going to be a little bit lucky, regardless of what I say. I think I could flip a coin right now, and I'd probably be 51% likely to get it right. That said, I think women are going to come out in droves. I think women are going to pack the voting booths and the mail-in ballots. And I think that probably that results in this person being the next president of the United States. I have never gotten one of those wrong. I picked Trump to beat Hillary last minute. That was probably my most famous pick because I got ridiculed. I actually dressed up as Donald Trump for a Halloween party. And, I was a firefighter's Halloween party, so they kind of liked it. I am not terribly confident in this selection. I think that it is, again, I just truly don't know this time. I've been able to predict these with a high degree of certainty in the past, I could see the Trump one coming in Wisconsin. And right now in Wisconsin, it's a toss up. Pennsylvania, I think that's the state to watch. I think whoever wins Pennsylvania wins the election. I think that a lot of people think that. There's a couple pathways for both candidates to win without getting Pennsylvania, but they're not real good. So we will see what happens. I will tell you, in Arizona, the Trump signs outnumbered the Harris signs 10-1. And I don't know if that was just because they believe in signs. However, it was pretty overwhelming to me. In Dallas, there was a lot of voting going on. I saw lines at voting booths every day. I don't know what that means exactly, but I know the neighborhoods I was in, and they were probably fairly liberal neighborhoods as far as Dallas goes. I think Texas is turning purple. I don't think Trump can lose in Texas, not yet, but we'll see. Again, it comes down to the turnout of women who are more heavily in favor of Harris than men are of Trump. So from what I can tell and all the stats I look at, but I think that there's a lot of playing with the numbers right now. I don't trust a lot of the university polls. I don't trust a lot of I don't trust any of the think tank polls. I think 538 is pretty good. But now that their silver is gone, I don't know how good those are anymore either. I am having a very hard time putting a thumb on this one. So I am a little bit conservative right now. I did predict this year that we'd have a big up year, and that was for the writing competition at Seeking Alpha. So there's an update of the writing competition. So the consensus view among Seeking Alpha analysts was a 4% rise in the S&P 500 this year. At the time this was published, I was in the lead. Now this guy, I think, is in the lead. I had an end-of-year prediction of 5,720. I think we're over 5,800 right now. This guy was the only guy to say over 5,800. So we'll see. I should make a couple bucks on this unless it crashes, but I'm the second highest. So as long as it's above that number, I'll get first or second. I don't think next year is going to be great. I think the economy will do better than the stock market. I think valuations are probably going to confuse people because I don't think people recognize that the E in price to earnings is in fact set to continue going up. The implementation of machine learning and AI is really good for half or more of the companies in the S&P 500 and half or more of the companies in the mid caps. I mean, around half the companies or more really can expand margins with good use of machine learning and AI. That doesn't mean that we're going to lose jobs. My dad was in town today, had lunch with him, and one of the things I told him was, I think that transportation industry, I think drivers are going to be under threat, but probably not until the next decade. And I think that in healthcare, we have 5 doctors retiring right now for every 2 that come out of medical school. There is a big shortage of doctors, nurses, and physical therapists, physician's assistants, and even nurses' assistants developing as the baby boomers retire. We have millions of people that we need to put into that sector of the economy, not only because of the retirements, but because the boomers are aging and there's going to need to be more care given. So I think that is actually the big problem that we're going to face in the 2030s and 2040s. I don't know how we deal with it. I think that we need to create an educational program that basically says if you want to do anything in healthcare, we will make it incredibly cheap for you to get through school. You have to be smart and work hard. We'll handle most of the money. So while I believe that everybody needs skin in the game, you shouldn't be coming out of college owing, for a brand new car and house. You just shouldn't be that much in debt. And that's really what's changed in the system. People who had student loans 20 and 30 years ago, I paid my student loans. Yeah, but the cost of education was 80% lower. The cost of education's gone up a lot, and we haven't funded it well. People run around saying, get rid of the Department of Education. I think that's a dumb idea. We have been watering down education since the early 1980s, in my opinion, which is why you're here. It's my opinion. I think that we have spent 40 years dumbing down the population. And I think that is coming home to roost right now. We'll see. What I do know is this: if things do go horribly wrong in the next several years, the United States has a wonderful ability to repair itself. And the only thing that really would change would be time frame and how much money. Because ultimately, we always fix the things that we break. So if we do break it, it gets fixed, but maybe it's at the cost of 3 or 4 or 5 years, just like after the financial crisis, and it costs trillions and trillions of dollars. We already know that we're on the hook for paying the Medicare and Social Security benefits to the boomers, and then the millennials after that. So if the millennials somehow vote to get rid of things like Social Security and Medicare or to water them down, they're doing it to themselves. And I don't know that that would be great for most of them. So we'll see which way that goes. Ultimately, things like clean energy development and AI and the discovery of new healthcare technologies, there's not much impact the president has on that. It just really doesn't. Legislation is legislation. The IRA is law. There's not really a way to get rid of it unless there's a red wave. And even then, they could only incrementally get rid of it starting a few years out. So when people ask me about some of the companies we're invested in, well, what if Trump does this or Trump does that? There's just legally not that much he can do. He doesn't have a magic wand. He doesn't wear a cape. And the courts are there to slow him down, which they've been able to do. Now, that doesn't mean that after 2 or 3 years, something doesn't get broken. But you know what? He's gone after 4. And then it gets fixed. So I think really what we're talking about are timelines and orders of magnitude, regardless of who wins or how it shakes out. The worst case scenario is that there is social unrest caused, which I see as being much more likely under President Trump than under President Harris. I actually think that Harris is probably more conciliatory. I do think that one of her faults is that she's starstruck by some of the people from California. And I think that she probably won't regulate technology all that well. No better or worse than Trump. I think that they avoid those battles because they're hard to win. Trump likes to say he won. Kamala doesn't want to fight with people that she's, used to be neighbors with. So I don't think that the technology oligopolies get broken up in the next 4 or 5 years. I think maybe they make strategic moves on their own if they see that there's economic benefit to them doing it. But the NASDAQ 100 with companies like NVIDIA and Microsoft and Google and Amazon and to an extent Meta, I think they remain some of the strongest companies in the world, along with Berkshire Hathaway, which is over on the New York Stock Exchange. And I'm starting to think that Berkshire is the must-own stock out there on a correction because they're sitting on $250 billion, right, in cash and securities. So if there is a big correction, if the Buffett indicator proves to be prescient here, and I think it's less prescient than it was in the past, then I think that Berkshire Hathaway with that giant pile of money is the way to play that. I think it's a much better option than the S&P 500. So I went through here and I put out my outstanding cash secured puts. If you haven't made these trades and the premium that you can receive is about the same as what I got, then I think you can go ahead and make those trades. I have some outstanding covered calls. I was able to get $1.50 for the January 50 AST Space Mobile. Again, I'm only writing this against about 20% of my position, just trying to pull in a little bit of income. I didn't close anything. I had some expire, right? These all expired. These got assigned to me, Enovix and New Fortress. And then Enovix, Enphase, and New Fortress are targets if you don't have positions here. And the way that we find these is by using the TradingView screener. And what we want to do, and this is just the Russell 1000, so it's an example, it's not my list. Russell 1000, top 1000 biggest stocks. Rate it by weekly RSI. You change everything to a weekly setting, not a daily. What do you care about a day? Care about weeks. And the oscillator rating, which is the rate of change. When these turn to buy, but the trends are still negative, you need to take a look. So I actually have one of these pulled up, if I could find it. Azenta. I don't know what they do, but I do know that it's a buy by the oscillators say it's a buy, right? So the curves are turning, but the trend is still negative. So what would you think this chart would look like if the oscillators are starting to turn up? That's called a divergence. So one set of indicators is turning in a direction up or down. while the other indicators are still going in the opposite direction. So you would expect in this case that this is a bottoming process, right? So it's been a sell and it's starting to become a buy. So you'd expect for the chart to have come down and then somehow it looks like it's getting ready to go back up. So let's take a look at what it does look like. And that is in fact what it looks like. So here we go. Have this big rally and then a 2-year crash. But what does this look like? Basically become a sideways trading market. And it looks almost like it's a triple bottom. 1, 2, 3. Over here, we got the Wyckoff signal, which is measuring supply and demand of shares. And usually when you get this green arrow, you get an upturn. There was a false signal here. These signals in here basically are indicative of heavy volatility. So these are signals that did not work out. Here's a signal here, goes up. And this is actually one of the rare occasions where you see this. That doesn't happen too often. So whatever this company does, you got was super volatile. And I'm not recommending this stock, but I just want to use it as a way of teaching that when the Wyckoff signal triggers and when we can see that the blue is gone, this signals a bottom. So this blue here is basically saying that there's weakness that could occur and it manifests by turning red. So if you take a look at what happened to price, start of 2024, it did in fact fall. So all of these different signals, I'm not going to go through all of them, are hints at what could be coming. So you're looking for divergence. Here we have the weekly RSI very oversold. So we have an intermediate term signal on RSI, relative strength index is very, very oversold. And it looks like the Wyckoff signal is saying that's about to reverse. So whatever this stock is could be ready to rally. And again, I don't even know what it is, but that's what the chart's telling you. So I wanted to use a stock that I didn't know anything about because I think just by looking at these charts and learning what this stuff is, read some of the read Getting Started in Technical Analysis, as I've recommended. Just using RSI on the weekly scale, not the daily. You got to understand what that is, learn what that is. It means a daily scale, you measure when? At the end of each day. Weekly scale, what do you measure? At the end of each week. Monthly scale, what do you measure? End of each month. So it's a longer time period that you're looking for a measurement. The longer the time period, the more likely it is to be correct. Short-term time periods are meant for traders who are chasing and they're just trying to run faster than everybody else. So this signal is likely to be pretty strong. You have the oversold RSI. You have the oscillators starting to turn, probably 2 to 4 weeks out. My guess is the stock is higher, probably up towards 50, if nothing bad happens on today, like a civil war. All right. So where do I get my information? It's a lot of places. And I just want to kind of show you what I'm trying to synthesize. So I read Forest for the Trees, all sorts of different things going on here. FS Insight, who, I talked to them about maybe working with them 4 years ago. Didn't want to leave Milwaukee after my first grandchild. And I read all this. Got the Daily Shot, which covers all kinds of stuff. Charts. Got Daily Chart Book. Charts. The Weekly Chart Storm. Charts. And ultimately, there's just so much information that I think what ends up being your best tool is to A, have a good bullshit filter, and B, you can ignore most of it. There's only a few things that make huge differences in the economy and stock market. It's employment, GDP growth, it's the change of interest rates that influence those other two things. And from time to time, something big internationally or extended credit situations where people can't pay their debt. And we're not really in a situation at this point where the United States can't pay its debts. Most consumers have pretty good balance sheets. They still have more cash than they did 5 years ago, even though it's not peak anymore. Employment is incredibly strong. We really are on the verge of having a labor shortage again in 2 or 3 years. And that is what I think people are missing. When they talk about trying to deport 1 million people, I don't know if there's 1 million people that need to be deported. I'm all for finding the crooks, the thieves, the murderers, the rapists, but there ain't 1 million. Having been raised Catholic, I will say that there is a passage in the Bible that says you're supposed to welcome your neighbor. And I believe that we need most of these immigrants to keep the economy afloat. So I think we need to be rational in the way that we do things. Certainly get rid of the problem people, but everybody else should be incorporated just like our relatives were. So let's hope that they can find a good solution for having enough labor as the boomers retire at 4-ish million people per year for the next 5-6 years. That is an awful lot of people that we are not replacing with young adults. Birth rate is lower than it has been in the past. I'm not, my daughter's keeping up her end of the bargain. She's going on number 3. But the reality is that the population shrinks. That means the economy will shrink, and then all the debt issues become much, much worse. So that's where we have the big problem. People want to talk about, well, we're spending too much. Take a look at the budget. The only real thing that you can cut is defense, and I don't think anybody wants to do that. If you cut Social Security and Medicare, get ready for mom and dad or grandma and grandpa to live with you, because that's what would happen. So, when you take a look at the rest of the budget, everything else after Social Security, Medicare, and defense, that's like 10%. So Social Security, Medicare, and defense are like 90% of the budget, and everything else that they make us think about is 10%. It's just, it's peanuts, So the government actually is fairly efficient. It doesn't mean it's great, but it's not really wasting much money. Most of the people in the government that I know, and which is quite a few, is they are chronically overworked. So they get done what they can get done. We'll see what happens Tuesday. I am always optimistic about the future. However, a red wave scares me. I will say that if a red wave happens, then we will get a financial crisis just like 2007 and 8. I think that it was going to start in 2019, and then COVID happened. I think that probably Trump got lucky on that, because if you look up repo market, REPO, repo market 2019, stick it into Perplexity. Did we do that? Would you like to stick it into Perplexity? Let's stick it into Perplexity, which I told you about this AI months ago. Suddenly it's in the news. Discuss the 2019 repo market failures and Fed support. What does it say? What does Perplexity say to that? Way faster than I could look it all up. Turn it into an article. In September 2019, the U.S. repo market, a crucial part of the financial system where institutions borrow and lend short-term funds using securities as collateral, experienced significant disruptions. The secured overnight financing rate, SOFR, key measure of borrowing costs in the repo market, spiked dramatically, rising from 2.43% on September 16th to over 5% on September 17th. Would you not poop a Twinkie sideways if interest rates went up 2.5 points overnight on you, right? That's a big deal. Some transactions were as high as 10% to borrow money for one day, one bank to another bank. So the Fed ended up pumping all kinds of money in. Looks like 1.4 trillion is one of the numbers they throw out there. In any case, you can do the research on this. It was a huge failure, and it was driven by the changes to the financial system from deregulation and excess leverage and changes in the way money flows work from 2017 to 2019. And that's just facts. So I think that the ideas that they're floating now, which is tariffs, which is another way of saying flat tax, in my opinion, and then reducing income taxes, that's a tax break for those of us making top 2% money, top 3% money, top 4% money, and cost of living increases for everybody below about the 80th percentile. How do you think people will react when they can't feed their kid, right? Or do you think they will even have kids if they're struggling? And I think that's a lot to wrap your head around. I understand everybody has their social issues. I understand that people who have never been to the border think there's a huge border problem. I understand that people who have not been to San Francisco or LA think that there is a huge California problem. In reality, it's mainly an agricultural state, except for the few big cities. And I'll tell you a story. So on my last day in San Francisco, and I had already driven through the Mission District and Tenderloin, so I knew that it's very rough. But I walked around the whole city, and I put on 15 miles on my feet in 3.5 days. I was sore, and those stupid hills, man, my calves were killing me. My last morning, I walked down to Union Square just to kind of feel it out, and it was touristy. There weren't too many homeless people, but I was like, you know what? I'm still a tough guy. I grew up in a rough neighborhood. I can still do this. So I started heading towards the Tenderloin. That is the area around City Hall. And I got 1 block, no problem. 2 blocks, no problem. 3 blocks, not too many tourists left. 4th block, or I believe maybe the 5th block, 4th or 5th block was Taylor. Taylor Street is where I changed scenes in the movie. And I walked a block and I stopped and I looked around. I was surrounded by homeless people. One guy shooting up, 2 people fighting, all in a half a block. Called an Uber. I was like, I think I made a mistake. I couldn't turn around because there's 3 people behind me now. So I found a spot to kind of hang out for a minute, jumped in my Uber. I said, hey, take the long way out here. Show me some of the Tenderloin and the edge of the Mission District. The homelessness and drug abuse is as bad as anybody has ever told you, and maybe worse. And you can see it on YouTube or wherever else. But the rest of the city, pretty darn good, right? I walked around Chinatown and Coit Tower and Financial District down to the wharf, even Union Square to where it starts hitting the Tenderloin. No problems, right? Probably not any different than any other big city. The point I'm making here isn't that there's not problem. It's that these problems have been politicized in a way that prevent good solution. And people on both sides are fighting about things that should have been solved years and years and years ago. We know that the precursors for these drugs start in China. They go to Mexico, they come across the Mexican border, but they also come through the port. So when Biden cracked down on the ports, that was a significant pressure on those drugs. So the price went up a little bit, which, people are price sensitive. So hopefully they were using less drugs. We have big problems and they are solvable, but outside the political system, because the politics of it all make it horrible. I think we actually need to empower the people that are civil servant to solve these problems, and then we start taking their advice rather than people that sit behind a desk and in front of a camera for a living. That's my opinion. As an analyst of investment, one of the things I did in San Francisco is look at 6 buildings that are all in bankruptcy, and one of them interesting. The other ones I think were too close to areas that I didn't want to be close to, basically on the Tenderloin side of Union Square. But there were a couple towards the financial district that made sense, that if we could put the money together, it might make sense to redevelop them. Because ultimately, like somebody said to me today, New York is still Manhattan in New York. I think San Francisco is always going to be San Francisco, right? So it's not something that can't be cleaned up. It can be cleaned up, but it's not just shuffling people to another spot. It's offering help without strings attached to the people who want to try. And then, we got to just find a way to, I don't know the politically correct word, but we have to find a way to prevent people who are harmed to themselves from being a harm to others. And that's not an easy problem. It's not as easy as saying, I'm going to round them up. It's not as easy as saying, I'm going to deport them. It's not as easy as saying, I'm not going to give them help unless they get off drugs. Well, they need help to get off the drug. So, if you do follow the money, here's something I would ask you to think about. On the bus stops and all over the place, there were signs about some drug, I forget what it's called now, that helped people recover from an overdose. That drug company is making a lot of money on drug overdose. Kind of makes you wonder what's going on. Somebody's making money on the drug overdoses, and it's a pretty hooked up company. Why isn't the drug problem getting addressed more seriously? And I think that we've been able to ask this question for a long time. I think that Just Say No era that I grew up in actually was semi-effective for a little while. Marijuana has gone full circle from everybody did it to everybody switched, everybody's doing it again. Is it a gateway drug? I don't think so, but I don't do it because I don't like to cough. I don't like to feel that funny. I barely even drink anymore. But this big picture that we have, it matters to the economy. It matters to who gets into office. It matters to who is pulling the purse strings. And ultimately, it matters to investment. All of these things are in some ways interconnected. So we just have to be careful that we don't have blinders on and get distracted like in the movie Swordfish. Right? Misdirection. We need to keep our eyes on what's really going to impact the economy and how that'll impact our portfolio. I freelance these webinars a lot. I kind of prepared for this one. I really didn't want to talk about the stocks. And the reason I didn't was because I think that what happens Tuesday is consequential in the short term and the long term, but the reflexivity of it all can be pretty severe. I think that the snapback of a red wave would be ferocious. I think it would be a spike, crash, and then the biggest bailout in the history of the world. I think if Kamala wins, we keep grinding along. And I think that we mitigate some of the problems from the boomer retirement crisis that's developing. I don't know how we deal with China. I don't know how we deal with Russia. I don't know how we deal even with North Korea unless we deal with China first. So all we can do in the long run is vote our conscience, vote our pocketbook. I would encourage you to vote your pocketbook because 98% of the people are not going to benefit under Trump financially. And maybe not many more will benefit under Harris financially. But I don't think that the risk of a financial crisis is that great under Harris. When I pick out these investments, I just go back to the first principles. What are the giant secular trends? We know that space is developing. I start to think to myself, how do I hedge all these things? How do I buy an investment that's also a hedge? I'll give you an example. I was telling you to buy Rocket Lab when it was $3, $4, $5 a share. Was it only because I thought they had a great vertical business model? No. What am I hedging against? What couple of things could I be hedging against by buying Rocket Lab? Somebody put EM. Yeah, that's right, Elon Musk. I said on a show that's backed by Elon Musk, I said, they haven't kicked me off yet, that there is a developing Elon Musk fatigue. Do you think if the Democrats win, if Harris wins, what do you think that means for SpaceX and Starlink? Do you think they get any favors at all? I don't. Do you think that they monopolize the contract? I don't, because we have Rocket Lab developing and Boeing and Lockheed Martin are both out there. They have a joint venture, by the way, and they're talking about being strategic with that. What if Boeing and Lockheed Martin put their space programs together as a separate company? What if Blue Origin, which has had some successes recently, Bezos' company, suddenly starts getting contracts? What if the U.S. government sanctions Elon Musk for having talked to Vladimir Putin while there were sanctions going on? It's very possible, this was just in the news yesterday, that Elon Musk violated sanctions against Russia. So here we have a dude with 11 children by 3 women who's building a $50 million compound outside of Austin and having all 11 of his children there with two of the mothers. Grimes won't be there because she's touring. Somebody said something interesting to me on my trip. He suggested that Musk might be a eugenicist. I really had to think about that. I don't know. But the thesis here is that some people might think that, or that the government is getting tired of him. So he openly backed President Trump, while guys like Jamie Dimon have tried to keep it on the down low, or Bezos are trying to keep what they think on the down low, trying to play both sides of the fence. What Musk did is a high-risk move. If you're a shareholder in Tesla, you should understand how high risk that makes your position. The idea that there aren't repercussions for action, I think, is probably misplaced. And I think that if Musk starts to have some of his comeuppance, that means his competitors are going to do well. Which of his competitors are we invested in besides Rocket Lab? You know some of the names. Now, there's been a lot of hype about nuclear energy lately. Going to have maybe 2 shuttered nuclear reactors reopened in the next 4 or 5 years. These small modular reactors might start coming online in the 2030s, 5 years from now. As I've explained in the past, the whole study, and I've been studying this since college, of small reactors has been the idea that you can make them so efficient that there's almost no nuclear waste at the end. In 50 years, they've had almost no success. Small nuclear reactors now, all the small modular reactors, all they are nuclear submarine reactors. There's nothing special about them. They don't keep radioactivity down at all. Now, there's gravity systems to keep them from melting down 99.99% of the time. But there's nothing fundamentally different between a small reactor and a big reactor other than the cost of building it and how fast you can do it. Do you want a nuclear reactor down the street where that school used to? Do you want it half a mile from your house? I think NIMBY is real strong here. So I don't see the big rally in nuclear investments holding up, or uranium. There's more uranium than we know. Just got to take it out of the missile. I mean, we can blow up the planet 30 or 40 times right now. What if we can only blow it up 20 times? So there's no shortage of uranium for what we are using for, especially for medicine. That's really where it gets used the most. Plutonium, I don't know which one. So if we have 40% more power demand by 2030, and we know that there's not going to be much nuclear by then, what's the hedge? The hedge is natural gas and solar to an extent. But solar is more of a growth play than a hedge. How does natural gas work? So you drill oil and you get natural gas too. We know that there is a huge jump in average mileage per gallon coming. How do we know that? Because Hyundai and Ford and a half a dozen other companies have told us that by 2027, maybe by the end of 2026, they're going to have extended range EVs. What is an extended range EV? It is not a hybrid. Get that word out of your mouth. It is an EV with about 1/3 the size of a battery compared to a current EV, but a 2 or 3 gallon gas tank in the back hooked up to a generator and a teeny tiny catalytic converter system. And it'll add 400, 500, 600 miles to the range of that battery. So you no longer have to store all that energy in the battery. The energy is stored in those 2 or 3 gallons of gasoline. So what has been the argument people make about gasoline versus EVs? Well, there's just so much more power in the gasoline than there can be in a battery, right? Les, what's that called? Les is not. Anybody else know what that's called? So there's a lot of energy that can be released from gasoline. The technology for generation with a gasoline powered generator has been around for decades and decades, and it got blocked as a technology. Energy, yeah. Oh well, okay. It's energy density. I wasn't sure if somebody was going to say it or not. And for some reason, oil companies didn't want to see electric vehicles, which have been around for over 100 years, with a little onboard generator that cut the need for gasoline by 80%, because that's what it's going to do. So now the environmentalists are going to scream, oh, we should be 100% EV. Well, someday we will, because the technology will get us there. Either that or we'll switch to hydrogen or something that we don't know about yet. But in the meantime, we can put a little EV battery, basically the same size battery that's on a hybrid now. And then instead of having an engine as well, just put the teeny tiny generator between the back wheel wells instead of more batteries, and then power up that battery. So you can plug it in overnight to get your 100 miles. You can do a fast charge for 50 or 75 miles if you stop at a charging station, or you let your generator kick in. If you really want to drive 500 miles in a day, you drive for 500 miles, you put 3 gallons of gasoline in to your generator while you're plugged in. You might have to have regulations on doing both things at once. Don't want to accidentally blow yourself up. And now your Enovix battery, which can't explode because it's silicon based primarily and it has a different architecture than the current lithium batteries, right? That car is going to cost about the same as the ICE vehicle, right? Because you've noticed that hybrids are only a couple $1,000s more than an ICE. It's going to be the same way with the extended range EVs. And they're coming 3 years out or less, not more or less. And then as those cars replace the aging fleet, which is the oldest it's ever been, there's huge pent-up demand for cars right now. And nobody's buying them, and I guarantee you that they're thinking the same thing I'm thinking. I don't want to buy a gasoline-powered car in case the price of gasoline goes up, and because I know that the technology is going to make EVs cheaper. I know that. Don't know how fast, but if I can stretch out my ICE vehicle a little longer, maybe during the next recession, they do another cash for clunkers. And I think that that's out there. So when I pick out these stocks, I'm not just saying, oh, look at this great stock. It's got a 7% dividend and it owns pipeline. Okay. But if oil becomes less important 5 or 10 years out, and they're carrying debt that doesn't look like it can be paid off in the next 30 years, where do those curves cross, causing gasoline and oil and fuel pipeline companies a problem? Natural gas pipelines, I think, are in short supply. So there's a difference between natural gas pipelines and oil pipelines. I'm pretty pro natural gas pipelines, but remember when Kinder Morgan was trading for 14 and I said buy it? What is it today? It's 24. You've been collecting a 6-7% dividend the whole time. Remember when I said that there would be panic pumping in oil? One of the charts up here, I don't know where exactly it is, but one of the charts in one of these places talks about OPEC starting to cheat. Their alliance is breaking down. Why? Because what I just talked about, fuel economy going through the roof in the next 3 years, and not all the cars get replaced at once, right? The cars get replaced over about a decade. You're going to see the curve for oil, which is already flattish demand. Oil demand is basically flat. It'll tick up a little bit because of the stimulus into the economy, right? Global central banks are lowering interest rates right now. So that'll be stimulative in the next couple of years of the global economy as the population ages, right? Can you see these things coming? Short-term stimulus, aging demographics problems all over the planet, huge debts. Will we prepare or will we react? We haven't prepared for any of the last couple of crises. We just react, spray hose it with money. It's good for people who own assets, as long as you don't sell at the bottom. And if you trim at the top and then put your dry powder to work near the bottom, it's a heck of a trade. But if you just hold your nose through it, you probably work out in a few years. So your bogleheads, your index investors, they might not average a big return over the next 5, 6, 7 years. At some point, they're going to have a rough patch where it goes up, down, makes a M. And after a certain period of time, 5, 6, 7 years, they're in about the same place with dividends. I think that's what's coming. I do think that we'll see an S&P 500 under 4,000 again. I think that we'll see an S&P 500 right around 10,000 soon, next 5, 6, 7 years. Does it make an M shape, a W shape, some sort of zigzag, whatever? Timelines can be adjusted by the election on Tuesday, by what happens with international relations. But ultimately, the big secular trends are playing out. We are seeing a clean energy transition. You're going to see the price of oil plunge at some point because mileage goes up. Plastics find replacements. We've been talking about different companies that can basically make plastics without petroleum. Different ways of waste legislation. What if they legislate away single-use plastic without a tax? Right? You can have a single-use plastic, but you got to pay a recycling tax. Who's going to pay double or triple for their bottle of water? Right? Now everybody buys a canister. And you get these machines all over the place that have reverse osmosis in water. Fill it up. Swipe your card for $1, fill it up with water. Right? Things that you see here and there that make sense will become everywhere. And who's president won't change that too much. Why? Follow the money. The capital has been committed. The checks have been written. The sunken costs are sinking, getting put in. The factories are being built. The assembly lines are being flipped. Tooling up is being tooled. So don't stress out too much about the election, other than to know, in my opinion, that a red wave probably sets up a financial crisis. Anything other than that, and it's just an investment by investment scenario. Slight changes to the asset allocation, depending on who wins and how the Congress sets up. It's only the red wave that can sink the economy for a while. And for us, for me in particular, who's lived through these things a couple times now, I know to make the trade in real time. You don't just sell and go, I'm scared. You watch it. You respect the momentum of the market. You respect the technicals. You will get signals, and you just have to prepare yourself mentally to know that at some point I might have to make a hard trade. I might have to sell half of what I own. But the market will tell you. You don't have to try to tell the market what to do. The market will do what it's going to do, and you will get signals on these charts that are supported by the quantitative data. So I have these bars over here. That's quantitative volume weighted analysis, and you'll get the signal. So I don't recommend 20 to 30 or 40 stocks a month, do I? I recommend a handful where the secular trend, the government support, the fundamentals, and the technicals start to line up. Some of the stocks where things are starting to line up are companies like New Fortress Energy. They pushed their debt out 5 years. They raised capital. They financed another LNG plant, and they're just sold off because traders are being traders. Oscillators are turning positive. RSI is 21. This is a stock that people are saying, oh my God, look what it did. I'm going to sell it. Yet it gets a buy. RSI is through the floor. The red bar is a climax in selling, right? Whatever. I lost one of my boxes. There we RSI through the floor. If following along, that's a big deal. What's the only question to ask when a stock does this? Who's been around a while? Tell the crowd. Tell the new people. What's the only question you ask right now? Is the company going out of business? That's right. If the answer is no, right? Will they still be here in 5 years? You buy this. You hold your nose and you buy this. You scale in over a few months. So I had a starter position in this stock, fell off a cliff, and went to a half position. And if my puts get put to me, the ones that are in the article, it'll be a full position. I think some accounts have so a lot of accounts have a full. So I'm trying to teach you how I invest, and I'm trying to do it without the cheerleading that a lot of these putzes do. The idea that you can discount politics completely is wrong, but the idea that you should be heavily invested in it is also wrong. There are only certain scenarios that are really going to move the needle a lot at the macro level. Otherwise, everything just affects industry to industry, stock to stock. Clean energy, not going to change much because the technology is dictating it more than the government finances. Technology is pushing this. Let's finish up on something fun. Let's finish up on Bitcoin. When Bitcoin was 50,000 something, I said it's going to go down to 20, maybe 15. Went down to 15. I wrote an article in November of 2022 telling people to buy Bitcoin. And I said it over and over and over again. Got to 20, should I still buy it? Yes. Got to 25, should I still buy it? Yes. Got to 30, should I still buy it? Yes. Over and over and over again, I told you that Bitcoin is an adoption story. You have the very wealthy and entire nation adopting Bitcoin. You've seen the BRICS, right? The emerging markets are adopting Bitcoin. Why is that? Because what I've been telling people for 12 years now, the U.S. economy is so incredibly strong. It is in fact exceptional that in order to fight the dollar from causing your economy to crash or have inflation, you need a counterweight to the dollar. The dollar is not going to collapse. The economy here is too strong. And relatively speaking, even when we hit a speed bump, it's not anywhere near as bad as everybody else's speed bumps. Our situation here is better than any other big country on the planet, and that will not change in any of our lifetime. Buffett has been telling you for 50 years. I'll tell you for the next, hopefully, 50. Bitcoin's being adopted by the BRICS and other countries because it is a counterweight to the dollar. It is the hedge to the dollar. It is to the dollar what the euro was meant to be, that it's failed at. When the euro was trading at whatever, 30% higher than dollar, I told everybody they're going to trade at par 5-10 years out. And what happened? It's trading at par. They bounce right around each other. Will the dollar come down a little bit in the next few years? Maybe a little bit. Jim Rickards and all the other thumpers, the dollar collapsed, the dollar collapsed, that they've been wrong about for decades. They'll continue to be wrong about for decades. Now, does that mean there's no decrease in purchasing power? It's not what it means. It means that relative to everybody else, our shirt, which is dirty, is less dirty than everybody else. That's what it means. So when you look at investing, think about, okay, whose economy is going to do great in the next 10 years? There was just an article out there that pronounced another American century. I'm on board with that. But I think the Indians are going to join them. And maybe in a generation or two, it's Africa. A couple of young, affluent countries that are mineral rich and educated and have some rule of law, they'll catch up too. Vietnam, maybe, could be Malaysia. Malaysia is really trying, but they're not giant economies. Of the giant economies, the United States, China, Europe, and Japan, and then India, and then California, the giant economies, that control 90% of the money on the planet. Of what I just mentioned, who would you rather be? Europe, Japan, China, India, United States? Any one of you not rather be in the United States? And I'm not even talking about just quality of life. I'm talking about from the standpoint of having a certainty that you can make money if you do things well, that you're not going to get disappeared in China, that you're not going to have an inflationary resource economy in Japan as they age. I think Japan's fragile. They've been dealing with it. They've done it well. Imagine what the United States can be like if we manage things as well as Japan did, who had fewer resources and an older population. In Europe, that's the old money, but they're spending it down. And that's why they allow immigration, because they're smart enough to understand that they need the youth, but it pisses off the old people. Well, demographics are demographics, and what do we know about demographics? Demographics are destiny. It's an old phrase. I didn't make that one up. I wish I did. Demographics are destiny. And the United States has roughly neutral demographics. That could change in 30 or 40 years if one of these next generations doesn't start kicking out more babies, or if we really stop immigration. Your population needs to slowly grow 2-3% per year. If you've flown over the country at any point recently and just looked out the window the whole time, at least when you were below the clouds or could see the ground, what do you see? When you fly over America from New York to LA, San Francisco to Florida, Milwaukee to anywhere, what do you see when you look down? A lot of what? What do you see? Imagine yourself flying in an airplane and looking at the ground. What do you see? Open space. A lot of it. A lot of it. 60% of California, 70 or 75% of Nevada. State by state, you can go by, especially west of the Mississippi. Federal government owns a lot of land. If we want to start dropping in brand new cities that are modern and do what China did, we could do it in a measured way. We could do it real easily. There is no problem this country can't fix as long as we don't start a civil war or a global war. So that's where I'm at. Every investment I make is somehow a hedge. And as I explained it to somebody today, I haven't looked to see if they're on the call. Munger, what did he say? Look for companies that have parts that the public doesn't value. Ford's real estate. Buffett, look for oligopolies. Sirius Satellite, we just started buying. Peter Lynch, small companies that become big companies because you don't need them all to work out. You just need a few that go to the moon. AST Space Mobile, so a space stock, to the moon. Rocket Lab, Ametis, maybe. Enphase probably has a big rally again someday because SolarEdge is destroyed. So they're an oligopoly with, basically they're the big dog with a couple small competitors. That's the way to invest. That's my story. Sticking to it. I have added a zero to my net worth over the last 20 some odd years. Started with a 6-figure amount, and now I got a middle 6-figure amount to a middle 7-figure. Not a bad run. And I actually did figure out my lifetime earnings are significantly less than my net worth. I don't think there's a lot of people who can say that when it comes to investing, or the people who write these investments. There's one guy on Seeking Alpha who talked about how he's investing his six-figure portfolio for retirement, all in dividend stock. He's proud of himself. He's selling subscriptions on investing to people. One, nobody can retire on six figures. Two, nobody should limit themselves exclusively to dividend stock. Doesn't matter who you are. You can sell options, so we'll go full circle here. You can sell options and generate income. And the thing about options you have to remember is you have speculators out there who will overpay to bet on hitting a grand slam. And you can sell these speculators who outnumber the option sellers by a ton, overpriced options over and over and over again. The premiums that we get for selling puts and covered calls are obnoxious. They should not be as high as they are, but because so many people gamble in the market, they overpay us for these options over and over and over again. So while I've beaten the market by several percent again this year, that is despite being 20 to 40% in cash almost all the time, because I just keep selling options. So good asset allocation, good stock selection that builds in your hedges right there, and selling options over and over. Do those three things: good asset allocation, smart stock selection without much speculation, and sell options to the speculator. When you go to Vegas, who do you think makes more money, the casinos or the gamblers? How many gamblers are there? How many casinos are there? The stock market with the options market is the same way. There's not a lot of option sellers, and there's a lot of option buyers. That's why I sell out, and I do it over and over and over again. And I respect the technicals. I've gotten better and better at this. I feel like I'm at the top of my game. So we'll see. I am going to look up this company, because if it's a good company, maybe we will add it to the list. I don't know who they are. No idea. Anybody ever heard of Azenta? If you have, you've read more than me. Medical supplies. All right. Let's call it a day. Go watch the World Series. I think somebody is there tonight. I think one of our subscribers is at the World Series, so good for them. All right, everybody. Have a great night. I hope I didn't babble too much.